I'm starting now. Welcome. This is Bill Petrovic. I'm SCORE mentor and host of our workshops. We've been doing webinars since the lockdown and COVID, and that means we've been doing them for about a year now. So all of our workshops are webinars at the moment. Today's webinar is going to be on business insurance. This is one topic we have not done as a standalone workshop or webinar before, but there's a lot of good material here. Our speakers have been associated with SCORE chapter for quite a while. Brian Hosking is one of the speakers here, and he has in the past presented similar material at our New Business Academy, which we ran once a year and is now kind of on hold until we can do something live. So Brian's with us, and also Dustin Ward, who is working together with Brian in their agency, and they'll say a little bit more about their business when we get started. But just to say something about SCORE, most people who are attending our workshops know about SCORE, but maybe somebody sent you the invitation and you don't. But we're a volunteer organization. We do mentoring and education for small businesses, entrepreneurs, and we work with the SBA. We're a resource partner for the SBA. And a lot of people find us by way of the SBA. Their website is kind of linked to ours if you get out to the SBA website. But we do have our own Indianapolis.score website where you can go to sign up for mentoring or find out what workshops are coming up. But the good news is, by attending this workshop, you're now on our mailing list to hear about all the future workshops. To quickly repeat something I said a little bit before we went live at noon, we are recording this and posting it on our YouTube channel, Indianapolis SCORE YouTube channel. And we are also, everybody who registers for this, not just those who attend, but everybody who registers, will receive an email a few days afterwards with a link to the slides and also a link to the YouTube video. So we are ready to go. As we go along, please use the Q&A to ask any questions that you have. And I'm going to let Brian and Dustin take it from here. So go ahead, guys.
Okay. Thank you, Bill. Appreciate the introduction. Hi, all. However many, I guess our screen says there's 15 or more of you. So hello to all of you. I've been a SCORE presenter for 15 to 20 years. I will have to say I've never done this before. So this is a little different, a little new. No audience feedback or no audience body language to kind of give any indication if you have a blank stare on your face or whatever, but we will try to do our best. As Bill mentioned, if you have some questions, he will either hold them to the end or he will interject, and we will do our best to make that I guess, interactive and timely response to that. Again, it's a little bit of a learning curve for us, being a first-time SCORE presenter on Zoom and not without seeing people. But you're here today to learn business insurance basics, and I'll repeat maybe what you expect to learn, and then we'll go into some details. And Dustin and I here will be sharing some of the conversation or topics, I should say, and back and forth. So what can you expect to learn today? Trying to make you an educated insurance buyer for some business insurance. It is vastly different than homeowners insurance, and you have to remember that. It is different, and I'm going to repeat that again. If you understand homeowners insurance, that could even be, even mislead you on business, because so many things are different. And we're going to try to explain that a little bit today. So hopefully to educate you, and if nothing else, make you ask good questions for when that stage of your business that you need to buy some business insurance, that you can ask the right questions and good questions. Also, business insurance terminology. Words are important. That can kind of sound dry and we won't spend a long time on it, but words are important. You said, it's kind of like a spouse, how you can say, I didn't say that, or I didn't understand it that way. Well, you try to avoid that with insurance as well. So words are, while they can be boring, they're very important. So we're going to talk a little bit about insurance definitions, not spend a lot of time on it, but again, to try to make you a better buyer on insurance, business insurance. And lastly, business insurance is complex, which I think you inherently or intuitively already know that, or you wouldn't be sitting here with your valuable time listening to us today, trying to educate yourself and teach yourself some things. So as I mentioned, I've been doing this 15, 20 years, and my reputation is I've always told a stupid joke before we start. So I'm going to do that here today. I'll get the same roaring laughter that I always get in person. So I can't hear any of you. So I'm just going to assume you're belly laughing after I'm done with this goofy joke. So here we go with that today. A pastor, a doctor, and an engineer are waiting to play golf, and they're waiting for a particularly slow group of golfers. The engineer says, "What's wrong with these guys? We've been waiting for 15 minutes. The pastor says, "Hey, here comes the groundskeeper, superintendent. Let's have a word with him." "Hey, George," the groundskeeper, what's with the group ahead of us? They're rather slow, aren't they?" The doctor asks. The groundskeeper says to the golfers that they're a group of blind firefighters who lost their sight saving the clubhouse from a fire, and they can come play anytime they want. Wow, the group is silent for a moment. The pastor says, "That's so sad. I think I'll say a prayer for them tonight." The doctor says, "Good idea. I'm going to contact my ophthalmologist buddy and see if there's anything he can do for them." The engineer says, "Why can't these guys play at night?" There's my one laughter. He didn't know the joke, so I'll just say, I assume you're all laughing. So, all right, on to the insurance materials you're here for. We did a little poll survey before some of you, what kind of businesses that you are thinking about starting, or why you're listening to us today. And we had, the responses were a lot of all others, so I'm not sure, but there were, out of the people that did reply, there was like 5 of you that put computer consulting, 5 of you for online sales, 4 for professional services, and 19 all other. So we will, Dustin and I will guide a little bit of our talk today, a little bit toward professional and E&O, because there's a number of you that need a special kind of insurance, which Dustin will talk about today. The all others, I guess, call us and we'll talk to you about your specific things if we don't address them today.
Or the Q&A is a good time.
Yeah, the Q&A, sure, absolutely.
Feel free to ask as many questions as you like.
Yep, absolutely. So without any more of me taking the time, Dustin's going to step in here and start running from with our slide presentation, and I'll be back here in a little bit.
All right, thank you, Brian. So first, I'm going to run through just a few things here that I'm going to hit on and give you a few of the highlights here. But business insurance, as you all know, is very complex. So we're going to talk at a high level and try to break down these items here of why do you need it, give you a few reasons why you should have it, and customers demanding it, where do you get it, and what do you buy, what do you get. Also going to discuss on how the premium is determined, and talk a little bit about audits and deeper into how the premium is determined, and then talk about some insurance definitions and give you a high level of things you should look for when you're talking to your agent. So I'm going to move over here, click to the next screen, and talk to you about why do you need insurance. Number one, your customers are going to demand it. if we switch the roles here, let's say, for instance, you, as a customer, you have someone come to your house to put an addition on your home, you're going to expect that person to have liability insurance if they cause damage to your already existing home. You're going to expect them that if one of their workers gets injured, that they're covered. Well, same thing for you. You should be providing that insurance for that customer. And you do that through general liability business insurance, which we'll go into a little farther here. So the next thing, lenders will require it. Certificates of insurance, maybe the person that you are contracting work through is going to require that you show them general liability insurance. So that's another reason why you have to have it. So property insurance, that's pretty typical, very similar to like a homeowner's policy. You are going to have to show the mortgage or the lending company that you have proper insurance. So if you're borrowing money, anytime you're doing that, you need to show that you have property insurance. So life insurance is another thing that you could be as an SBA. If you're going out and getting a new loan, they may require you to buy life insurance. So we often say that death is not an excuse to repay a loan. You're still going to be, even if you pass away, somebody needs to pay that debt. You can solve that by buying life insurance, and you may need to present that. So next on the list is your employees deserve it. Workers' compensation is how you do that. And we'll go into depth a little bit further about workers' compensation, what it does, but that basically protects your employees. And it's basically, we often say it's health insurance on steroids. So it provides coverage for your employees. So they deserve it. One thing that's not on the list too, I just want to hit on, you need to buy insurance to cover your investment. The survivability of your business relies on you purchasing and making sure you have the right coverage in the event of a loss. So on next, I'm going to talk about where you get it. Where do you buy insurance and the channels of which it is available. So there are a few different channels. I'm going to talk a little bit about direct writers, independent agents, combination writers, and the fearsome online internet providers. So your direct writers, these are your agents that are your State Farms, Progressives, Farmers, American Families, your guys that specialize or have one specific carrier in-house. They do multiple lines of insurance and these guys are typically geared to auto, home, life. Some of them even do banking, a little bit, jacks of all trades. So your independent agents, which is what Hometown is, we work with a multitude of carriers. We have about a dozen independent companies here: Travelers, Hartford, Cincinnati, Erie Insurance, multiple different companies that we can go to and try to find the right coverage for your business. And then there's also your combination writers out there, your Progressives, Liberty Mutuals that have both. For instance, Progressive, you can go online and buy a policy. You can call Progressive direct, or you can buy a Progressive commercial auto policy directly through us. So for the right exposures, Progressive is sometimes a good fit. So again, one thing that we do not suggest is buying it on the internet. Of course, we don't want to commoditize this business, and we want it to bring value to it. Make sure you're properly covered. A lot of times you don't know what you get when you buy a policy online, and you need to have a business expert tell you and guide you in the right direction. So again, here at the very bottom, hire a business insurance agent to represent you. Find that right person out there who can identify your exposures. Also, you have to think about the claims response too that you get online. You don't have a direct person to call, a local person to rely on to help you through those claims. So hope that explains where you get the insurance. And then what do you get? What should you buy? Brian's going to expand on that.
Thank you, Dustin. Okay, so what do you get when you buy insurance? Let's hope, first thing I hope is you sleep better at night. Peace of mind. that would be, everybody focuses on price. And I even had this conversation with my father. I mean, as many years as I've been doing this, his first conversation and discussions always about price. Well, I think I have to remind him that, okay, you're sleeping pretty good at night. You get a peace of mind. You have a professional, hopefully an independent agent, as Dustin mentioned. Yes. Am I biased to independent agents? Yes. But what do you get? You get safety, security, peace of mind for your customers and vendors. So you're doing the right thing. You're doing it for yourself, for your investment. You're doing it for the customers, vendors, and it's just what's expected. And as Dustin had mentioned before, if you were on the other side, you're expecting your people at your business or at your house or the vendors or contractors, you expect them to have insurance. It's certainly fair for them to expect you to have it. All right, loss control. What else do you get besides a premium? You might say, oh, we're getting as a premium, and that's an insurance guy selling insurance. So loss control services by an insurance company. What does that mean? If you have a more difficult or complex or dangerous business, I mean, let's say you get into manufacturing and you start making ladders, or you're making something baby related. The insurance companies have specialists, trained people that have gone to school and been doing things and seen accounts probably similar to yours for years and years. If you're the kind of client we want to insure, and hopefully you want to be as safe as you can be. That's for your own employees, that's for the people buying your product. So you can rely, and it's by the way, it's free for them to come out and look at your procedures, your policies, your building, and maybe you're overlooking something. Maybe there's a fire, maybe there's an oily can of rags sitting right next to the furnace. You don't think anything of it, but maybe just last year they paid $1 million loss on something like that. That's just like, no brainer. You didn't think anything of it. You're too close to your own business, if you will, an outside set of eyes that will say, hey, you might want to do this. And sometimes they say you might want to do it, and other times they will say you will do it, or we will not insure you. It's that dangerous. So hopefully you have the right, the goal is that they want to make you safer. Of course, do they want to pay a claim out? No. I mean, is it self-serving? You could say that, but in the long run, no insurance claims are the best kind of claims for everybody. Okay, so that loss control services, insurance valuations are part of that. Maybe you bought a building for $100,000 and it really should be insured for $400,000. You got a great deal on it. So we're going to be looking at insurance valuations and saying, hey, you might want to increase the value here. And this is a give and take. Some of this, I mentioned, some of it is required and some of it is suggestions and trying to make you a better business in general. All right. What else do you get when you buy insurance? You get business income losses. And I have found over doing this 30 years, people generally are not aware business income losses are insured. What does that mean? Let's say your business is going well and you're making $100,000 a year and you have a big fire that you actually, if you buy the right kind of insurance, have the right kind of agent that sells you the right kind of insurance, you insure that cash flow, that stream, even extra expense. Because what happens statistically, and I don't know, it's a high number, 50% of people, businesses that go out of business is because of cash flow, not because their sales and getting back. The cash flow kills them. And the insurance that you buy, the right kind of insurance, will ensure that cash flow, that business income, better yet, the extra expense associated. So if you need to ship something from Europe at some ridiculous cost overnighted to get you up and running, the insurance company will likely do that, especially if that mitigates your future business income losses. So basically, they can be an open checkbook to get you back going for business income. And I have lost income, extra expense, and even payroll. Payroll expenses, you can insure that. So you're down and out, you pay your employees. Well, we all know getting employees in this environment is extremely difficult. and you certainly don't want to lose them or lay them off after a fire. You probably don't need them the same way. You might not even need them full time. But again, with the right insurance, if you've purchased it, you can insure all of those expenses, the continuing expenses, and look like a hero to everybody. And
Hey, Brian.
yes,
Brian.
yes.
So I was kind of expecting this question, but here it is. Do they cover pandemic issues?
I guess I should. Yes. No. The answer has been the answer, and we're seeing that in our environment, in our professional. They are not covering pandemic, and the main reason is that that's not a physical loss to the property. You have to have a physical loss. Here's another example that some people might be able to relate more. What if the road closure, let's say you're, if a lot of you are from here in Indianapolis, the road closure in Carmel or on 31, let's say they close a road right in front of you, right in front of your store. Okay, that again, that's not COVID, but that's another not covered loss because there's not physical damage to your premises. It's not a covered peril. I know that sounds like insurance speak, but not all claims. Some of you might say no claims are covered. I know the COVID thing has been tough. The thing that I got unhappy, I'm going to be honest here, I was unhappy with some of my own insurance companies when we had some of the civil commotion and riot downtown here in Indianapolis. So we had a COVID, we had everybody shut down, then we had the civil commotion and riots, which should be covered. Well, the physical damage, the damage to the buildings that we had insured, we have some bars and nightclubs and restaurants downtown insured, the damage to those buildings were covered, but the business income wasn't, or almost nothing, because they were having no business income because of COVID. I thought maybe that they should be covering that business income on that, and it didn't work out that way. So it's extremely fact sensitive to the claim, but generally a long answer is COVID wasn't covered in this particular case. We're in all the courts that are going on right now, and you guys may hear on time to time or get a news feed about once in a while. I can tell you about 1 in 100 lawsuits right now, COVID related, are going to trial or going to the next step, but 99 of them are all being tossed out. And the language has said, and the courts have said in all the different areas, that not covered with a few exceptions, and those probably will end up being found to have no coverage either down the road. Okay, any other questions, Bill, that are popping up right now that we could address?
No, you're good. I just thought of something myself though. Are there any agencies that are writing business interruption insurance to cover pandemics in the future?
Well, okay, there's one agent, there's first an agency. I'm going to clarify, and again, we're going to get into words and terminology here. And Bill is, for all those you listening, Bill's the moderator here, but he's more or less a consumer, just like the rest of you. Agencies can only write what the insurance companies put the language to and allow us to sell. So first, agencies don't write anything. We sell it, we manage it. So are there any insurance companies out there selling what you'd say COVID related? There was one out there that was here local. We tried, Dustin, didn't we try to get a quote? It was, I'm going to say that still evolving. I don't think you could afford it if you could buy it. And I was very suspect. We tried to dive into finding out about it. We didn't go very far. I think at one point they said they had already written the maximum number of policies the insurance company would allow them. And I can't imagine what the cost would be. Maybe you're insuring something for $1 and paying 75 cents for it. What kind of insurance is that? So generally the answer is no. And most of the companies are clarifying their exclusion to wipe out any chance of COVID even being adjudicated by lawyers in the future. It was not intended. And the answer generally is going to be no. Maybe there's an exception, but mostly the answer is no. Okay. All right. Back to what do you get? Following my outline here, and an expert in claims with this. with the goal of speedy recovery in the event of a claim. So you've just had a fire. I always say that if your building's on fire, you probably don't call me first. You're calling the fire department, you're calling somebody, but sure, you're going to call me as your agent pretty soon thereafter. And I'm going to reach out to the insurance company adjuster and the specialist. Of course, I will be there, but they have the relationships from doing all kinds of claims. Fire, you're not the first company that will have a fire, or a liability loss, or flood is a bad word, because flood is a different kind of coverage, let's say. But some kind of loss that you've had, the insurance company has the expertise, has the relationships, and they are going to jump up and help you and to get you the claim mitigated as fast as you can and get back to doing, getting back into your business. So that's why I want to say, what do you get? You get all these things: peace of mind, loss control, make you a better, if you want to say, make you a better or safer business entity operating. So I think those are all very good things. Besides getting an invoice, you get all these other things. All right, the next page. Next slide. How is the premium determined? And that is I'd say it's kind of unique. It's different depending on the kind of business you are. It is not that I like you, I'm going to give it to you for free. I don't like you, I'm going to charge you double. It doesn't work that way. So how does it work? Most of you listening here are going to be a new startup business. So one of the things I always tell my new clients is help me help you. What does that mean? If you are working with SCORE, having a business plan by Bill or one of the mentors, what I do with that, besides SCORE helping you clarify and give you some direction, I can show that to the insurance company, the underwriter. Underwriters are the people that price and review your product or your service and what you're doing, and ultimately come up with a price. Well, the SCORE outline, that typically business planning, that is very helpful for you and for me, along with a resume. If you have a resume, if you're a PhD in the field, or you're a PhD as far as experience, you can say, you have all this experience. Well, that's helping me help you. The more comfortable the insurance company underwriter can be with you, your business plan, your background, all those things are going to help your premium and make your premium better. Sometimes it's just a matter of even getting a price. Sometimes it's supply and demand out there, depending on what you're doing. Some of you, if you're doing a grandma's knitting shop, you can probably go online and get a price for that, and 20 people offer. If you're doing a demo service for high-rise buildings, okay, the supply and demand there, and you've been working for someone else and you're going out on your own, okay, there aren't going to be too many people jumping up and down, hey, I want to insure that guy. We can get it done, but again, you help me and I can help you. So your experience in the field, the product or service that you are, it says selling in this outline, or that you're providing. So those things are about you. Then how do we get specifically about your business and pricing it? So the two main ways are payroll and sales. So most of you, payroll related is mostly contractors or even consultants are payroll a lot, computer consultants. And Dustin, would you say they're payroll or sales for computer consulting?
Typically on payroll.
Payroll. So the more your payroll, it's going to be let's say $1 per thousand of payroll. That's how. And we're going to ask you at the beginning of what do you think your payroll is going to be at the end of the year. And we'll talk about an audit here in a minute. At the end of the year, we're going to say if you estimated 100,000 and you ended up having 50,000, or you ended up having 200,000. We'll talk about that in a minute. But payroll is the pricing tool for liability. The rating basis. It is the rating basis, along with the other way is sales. So if you're more of a sales-based organization, that would be the rating basis for, again, how accurate are you at the beginning of your estimate? Say, Brian, I want to buy insurance from you starting on April 1st, and you estimate $500,000 of sales your first year, and you end up having $1 million. Well, That's a heck of a year. That's a great start. You're not very good at guessing. And so let's talk about that. You're not, or estimating, guessing, whatever. So let's talk about an insurance audit. Everybody always cringes when you hear audit. It's like an IRS audit or anything. Well, an insurance audit, it's not like an IRS audit, but it's not, every company has them, and you're going to have it for the most part, unless you buy a bot policy. There's a few policies that aren't auditable, but assume that you're probably going to purchase a policy that's auditable. All work comp policies are auditable. So let's talk just a moment about work comp, how that's priced. That is always priced on payroll. That's the only way it's priced. And depending on what your service or your product is, it's almost kind of like an SIC code. So depending on that SIC code or the work comp code, you're going to get priced on that. And then at the end of the year, we're going to say how many employees in that code did you have, and how close was your guess. So
hey, Brian,
I'll give you a real life example on general liability audit.
Brian,
You had $100,000 in sales you estimated, and you paid $1,000. I'm going to say that again if they're writing this for budget or for trying to understand. So you have $1,000 premium that I charged you based on what you told me at the beginning, and you estimated $100,000 in sales. 100,000 sales, $1,000 premium. At the end of the year, you end up having $200,000 in sales. Okay, the audit's going to say, okay, you were off by 50%. So what's going to happen to you at the pricing at the end of the year? We're going to send a bill out to you after the audit and say, guess what? Congratulations, you had a great year, great first year in sales. You were off by half. This is, you're going to owe us another $1,000. You're going to owe us another $1,000 because you were off by sales by half. Now, the fair part of that, if you will, if you want to say it's fair, is if you had 50,000 in sales instead of 100, you're going to get half your money back. Okay, so that's the part that's fair, similar to a tax audit or a tax liability. Okay, you make projected tax payments on your income, and you have to square it up, if you will, at the end. This is
Brian, I have a question. Brian.
Yes.
Some of the people listening have home-based businesses and suggest that there might be some overlap between what they're already getting in their homeowners and what they might need for their business. And a specific example would be someone is operating essentially out of his garage and doing some work on cars in his garage. Let's say it's detailing. How do they coordinate the policies between the homeowner's policy and the business policy? How does that all work?
Okay. You want me to take it here?
Go ahead.
All right. So you have and we're going to get into terminology in a minute here. There's two things going on. Let's use your example, Bill, about that person working out of their house and the garage. I like the example, and doing maybe something out of their garage for somebody and making money. We have two exposures there. We have a liability exposure. We have a property exposure. Liability, the property is your house. Let's pause. We're right by a train track here. We didn't anticipate this. I'm not going to try to overtalk that. Sorry. Story of my life, on the wrong side of the tracks. So, okay, all right. Well, he wasn't as loud as usual. Okay, so let's go back. We have a property exposure, which is your house you're working out of, and you have a liability exposure for working on the cars. Okay, so you have two bad things going on here. First, let's talk about the house that you don't expect. Every homeowner's policy that we know of, all of them we represent, have an exclusion for when you're working out of your garage. If you're doing any kind of business out of your house or garage,
or even storing business personal property in your detached garage.
Right. It is going to void out. You have a fire in your garage, you have a fire in your house, and they find out. And you're going to innocently say, because you don't know, hey, were you doing any business? It's just going to be part of the, sure, I was doing this or that. you are going to get you're going to get the whole claim is going to be denied. And this is part of what frustrates and gets bad PR and news. There is a business exclusion in your house. It is going to void your property coverage to that garage or even to your house. The garage, typically a detached garage, it's going to burn down. We've seen it happen. They're going to deny the claim. You're going to get zero money. That's a shocker. That's bad PR for everybody. No one's good, but that's why you have to have a business policy. So then the liability part is on your homeowner's policy. The homeowners has a liability exclusion for any business activities. So that is how both of those things are going to be excluded in your SOL. And most of you probably know what that means. So it's why you have to, don't rely on your homeowner's policy at all for doing any kind of business.
Yeah, I think one of the big takeaways here is if you have the detached garage, that's an easy one that's built right into the homeowner's policy. If you're storing any business personal property, if you're working on cars for a business in your detached garage, and you have a fire there, it's going to be excluded, and you're not going to get anything for what you thought would be covered. So that is important. Just because you buy a business insurance policy too, please make sure that you're buying property coverage for that detached structure. Very important.
And I'm going to say one more thing. This is important if you're at home writing things down. Business insurance doesn't care if you're doing personal stuff, whatever you're doing, your personal living. Okay. Contrast to homeowners insurance, personal insurance cares greatly if you're doing any kind of business insurance. Homeowners is cheap, doesn't anticipate the exposure, all those kind of things. Business insurance understands that you're probably going to do some personal things. So it is very important to know that and understand that. And we're going to talk about that in cars when we get about uses of cars and things like that here in a little bit later. All right, Bill, any other questions, or we're going to move on to the next slide.
Ready to go with the next slide.
All right. Now we're going to get into, this is a little bit of what I alluded to in the past here, insurance definitions. Some of you might be saying, oh my goodness, couldn't be more dry, couldn't be more boring. Well, yes and no. Yes and no is what I'd say, and we won't spend a lot. You can let you read it. I get asked all the time, am I going to be covered for this? I'm sure probably most of you said, am I covered for this? Well, back to what we just said, Bill, that was a good lead in. Are you covered for liability? Are you covered for property? I mean, when you say, am I covered? That's such a broad question, and there's so many parts to that question. So the example we just gave, there were two parts to that question. And that was a great lead in by accident there, Bill. Loss payee coverage is a property coverage. So you have a loan, it's just what I said, it's property. It can be cars, it can be buildings. Same, loss payee is mortgagee type of thing. Same thing, mortgagee is a house, loss payee is a car, but loss payee is a writer for whoever loaned you the money, and put them as a writer. And that usually, there's usually not a lot of problems with that, because who's ever loaning you money to do this, they're going to be forcing you and asking you and bugging you until you have their name somewhere on there. What does it really mean is when a check gets paid to XYZ Corporation, it's going to be XYZ Corporation and ABC Bank. You two are going to have to meet at the bank and pay off or extend the loan or whatever, but their name will be on the check in addition to your XYZ Corporation. So that's what's going on. They're trying to protect their investment in you and the business. Additional insured is a liability coverage. And I think Dustin will talk maybe a little bit more of this in a later slide. Liability. If you're a business, if you're a subcontractor, okay, some of you are going to be starting out small and you aren't going to have the leverage to force people you're not going to be able to force people to have them cover you. It's going to be, they're going to force you as the new startup, a vendor, probably to try to help cover them. What am I really saying is you're going to have to add whoever you're working for. If you're a sub, you're going to have to add them onto your insurance policy for liability. So let's say you're a contractor and you're working on the house. And you end up, and you're a sub working for a general contractor fixing something at a house. You as a sub are going to have to add the general contractor's name on your policy, and should you cause a loss or a loss happen, your policy is going to cover yourself and the general before his response. You are there, the general is riding on the coattails of your policy and getting some free coverage, if you will, under your policy. If you get big enough, you can reverse that the other way. So that's not expensive. You might be cringing, why would I want to do that? It's waivers of subrogation. I'm getting kind of in the weeds, but these are very typical everyday language. You ask for it, you provide it. It might cost you $100 a year. It's inexpensive coverage. It's in the business of doing insurance. It's very understood and normal, but language you should know. Additional insured is liability. We can talk about it more individually on a case-by-case basis. All right, this is important. The next one, named insured versus additional insured. Well, I just told you a little bit about additional insured. An additional insured is a bank or somebody that can't do anything other than ride the coattails of your policy. They can't do anything other than what you authorize them. You named insured, let's talk about, I'm going to use a spouse. Let's say I'm going to go to homeowners insurance on this one. Let's say Brian and Kelly Hosking. Brian or Kelly can call the insurance agency and make changes to the policy to their agent, Brian or Kelly, because we are both on the policy. We're named insured. That gives us every right to make changes. If only Brian Hosking is on the policy and Kelly Hosking is not, she can't call in and make any changes. She has no rights to that. So you can imagine and get in some divorce situations and all these kind of things. That gets we get in the middle of some kind of ugly ones about, they're getting divorced and one wants to take the other off. Well, we have to call the spouse of the other and say, hey, we're going to do this. Are you going to give us permission? Sure. Or that guy or gal can go stuff it. So understand a named insured has every right and can make all the changes in a policy. Additional insured is just a rider on the coattails, if you will, of a policy. It's small difference, but a very big difference. And that's the end of my particular parts of the slides at the moment. And I'm going to hand it back to Dustin for some additional.
Yep.
Thank you.
Thank you, Brian. I hope it's okay.
Wait, before you go, I had a question. So are you saying that the policy can be in two names, both names?
Absolutely.
It's up to you, essentially, how you want to have that laid out.
On a business insurance, you can have 4 names on it. I mean, we're talking about, it can be ABC Corporation, it can be DEF Corporation, it can be, XYZ.
Typically, though, who you want as the named insured is your company or the companies that you own. You don't want to have an additional insured or a vendor. You want to have that vendor as an additional insured so that they can't make changes or be covered under the property portion. They ride the coattails of the liability portion of the policy.
So if you've got multiple people that are named, each one of them is authorized to make changes without the others getting involved. Is that right?
Well,
yeah, typically when you have multiple named insureds on a policy, it's same or common ownership.
They have to be owners or executives. And remember, we're talking about corporations a lot here, where maybe you're more thinking of a personal home and auto type of situation, but in a corporation level, you've got to be a management or owner or corporate officer to be making, and typically the agent's going to know who those people are.
So like a lot of people have LLCs, it's the LLC ownership. So if it's an LLC that has both the husband and the wife are owners, then each of them can be the named insured.
Well,
the LLC would be the named insured.
Right. Don't get that confused with who can make changes. The LLC is, like Dustin said, is the named insured, but either the husband or wife can call up and make changes to the policy.
Okay. What about insurance? This is sort of not exactly what you've covered, but what about buying insurance? A not-for-profit company, do they need to buy insurance if they have a gathering place or a ballpark that they own?
Absolutely.
Yes. Yeah. And a lot of companies, I mean, there's specialized companies that do not-for-profits, but yeah, absolutely not-for-profits have a liability exposure. We do see not-for-profits purchasing D&O insurance, directors and officers insurance is pretty common.
But back to, you have D&O, you have property, if you're owning anything, you have liability, if you said they're a ballpark or whatever, they probably have to sign a lease or a user agreement for that day or for the year. So any of that, that's immediately exposing them. Not-for-profit doesn't get them out of the insurance liability. Now, there may be no money, and for someone to make a claim against, but guess what happens then? Then it goes against individually against the not-for-profit, the directors and officers. They are personally liable for, if there's anybody listening here that's a not-for-profit, I believe the statute is you are personally, your homeowners may or may not kick in, but it's much better just to have a D&O policy so your individual personal liability isn't exposed. So not-for-profit doesn't get you out of the insurance quagmire, if you will.
Good. That's all the questions at the moment, but anybody who has one, keep asking.
Yeah, please ask away. Thank you, Brian. Again, we're kind of breaking it up here to not have to listen to one voice the entire time. So these 10 topics here is our insurance checklist. These are the items that if I sat down with you and went through your exposures, these are the things that I'm going to want to hit on. The property insurance being number one. And again, I'm not going to go super in depth on these. I can see our time here is maybe run a little short. So I'm going to speed this up a little bit. These 10 items, you can also Google these if you want a little bit more in-depth. Happy to expand on them as well. But so the property insurance on premises versus off premises coverage. This is important. I'm going to give the example of the guy with the garage, and he has bought some property insurance for his tools and his equipment, his detached garage. He's insured his building. But let's say a customer calls him and says, hey, please come out to my residence and fix my vehicle on my site. So does he have property, or does he have property coverage for the items that he's putting in the back of his truck? For instance, let's say he takes a generator and a few tools and something else that, whatever it may be to fix the vehicle. And while he's out there fixing it, somebody steals all of his items out of his vehicle. So he has bought building coverage and he's bought business personal property, but the business personal property only covers items that are on premises. Does not cover things. It does not cover the items that are off premises. In our business, it's called inland marine. Those are equipment taken off premises. There is a difference between those. You need to know that there are items there that are not covered if you take it off your premises. Business income, extra expense. Brian hit on that a little bit. That's basically protecting your cash flow. So commercial liability insurance. And I do want to link this up with professional down at the bottom. And you must be aware that these two are not the same thing. And typically the first time we see professional liability coverage asked for, or E&O, is when the vendor may be requiring it. So these are two totally different things. Again, you need to be aware that there's a difference. And commercial liability insurance covers resulting bodily injury and property damage. Professional liability is the errors and omissions for the consultant, the physician, the computer consultant. We do have a few computer consultants that have been required to show proof of errors and omissions insurance, which sometimes they find out later that it is difficult to get. I can think of one recent client that we had to write an E&O liability for a computer science client that was doing work for Rolls-Royce. Had no idea that they needed the coverage, but Rolls-Royce said, hey, if you want to work here, if you want to take this contract job, you need to provide us with an E&O policy. So again, not commercial liability. Automobile insurance, this could be, and for a lot of companies, it's their single largest exposure. People driving a big truck out delivering whatever it may be could do a lot of damage, and it could be, and it really is. It's sometimes your single largest exposure. So the typical limit that we see there, it starts out at about $1 million of liability coverage, and I guess we don't really see any less or any more.
Well,
So
we do more on the umbrella.
We do more, I guess, when we get to the umbrella. But the crime insurance, this is your money coverage. This is for your employee who decides that she is not making or he is not making enough money to cover the bills and decides to take more of your money. So standard policies may not come with crime insurance. Some might have a low limit of 5,000 or even 1,000. So if you have a high cash flow business, you need to be aware that you may need to purchase additional crime coverage. Work comp insurance, just hit on this real quick. Again, that's health insurance on steroids. That's for your employee. In the state of Indiana, if you have one employee or more, you have to buy work comp. You're required to by the state. Claims pay 100% of lost wages, or 100% of medical, and 66 2/3 of lost wages paid. So maybe a little bit more in the weeds there, but you need work comp if you have an employee. That's the main takeaway there. Your umbrella. So many people get confused on what an umbrella is. A lot of people think that it covers property and liability and this and that, and it's a broad umbrella that covers everything. Well, in 99% of the cases, the umbrella is just an extension of liability of what you already have on your commercial package policy or your automobile policy. So, for instance, if you have a $1 million umbrella and you carry a $1 million limit on your auto, you have a $2 million total limit in the event of a catastrophe. So professional liability, already hit on that. Cyber liability, an evolving coverage. We're seeing more and more of it. Brian will discuss a little bit more in depth of what that is. Employment practices liability, commonly referred as EPLI, another thing that's not included in the package. So if you go buy a BOP policy, a business owner's policy, commercial package policy, this is not something that comes standard on it. Employment practices liability is the hiring, firing, wrongful termination, sexual harassment, things that could cause you a financial loss in the future. So again, these 10 items here are the main 10 items that I would hit on with a new client. So you want to make sure that you're properly covered and understand these things. And hopefully I explained it well here. So we're going to move on and go in depth a little bit more.
Don't move on. Don't move on. We're getting good questions.
Okay.
And also, don't worry about the time. I think you're doing fine because we can go to 1:30. Here's a question. I'm starting a food truck. Would the truck itself be considered the premise? How do I insure? What kind of insurance would I get for my food truck?
Yeah, so you want a commercial auto policy. So that's a good question. Is the vehicle your premise? I would say
that gets to be a little gray.
Yeah.
Each company is going to be a little loading and unloading without getting into the weeds on that. You're going to want a commercial vehicle policy. You're going to have liability for the product. Let's say you're serving 2-day old, or the food has gotten warm, you didn't know, or spoiled or whatever. So that's going to be your product liability. Now, should someone slip and fall, or you spilled something right there at the edge of the let's say in your immediate vicinity, we would have to ask how. I'm sure there's coverage. Would it be under your general liability or would it be under your auto? If you have both, it's going to be covered. I'm not sure which one's going to cover, but there would not be a gap. But it's an excellent question that we don't always have the exact answer on those kind of unique exposures.
Here's another question. I'm going to rent a vehicle to take customers to a different site for an event. What insurance should I get when I rent this vehicle?
Can we put that off? Just I have a vehicle thing coming up here in about 5 minutes. Can we defer that.
Okay, yep. Okay, here's another question. I'm in the commercial construction industry. Do you recommend that I carry, it's D&O, right?
E&O, yeah.
E&O, errors and omissions. You recommend that I carry E&O? I'm the founder, I'm the CEO, and I
Yeah.
provide construction management services.
Absolutely. We have one. right
Yeah,
now.
absolutely. And that's kind of my specialty. I've spent a lot of time on contractors, errors and omissions. Absolutely, you need it. There's some companies that we write for who do not include it in their package policy. We have other companies who will allow you to endorse it. The best way to get coverage for it, or the easiest way and the most cost efficient way, is to insure with a company. And we have multiple companies that will endorse that errors and omissions or your workmanship directly to that policy. Standalone policies for contractors E&O, even if you're a one-man show, start out at about $2,500 a year. So I think it's important to find a company that will do both and be able to endorse it directly to the policy.
Okay.
Disclaimer there.
We're
You can get a little bit more comprehensive coverage too by buying a policy from an errors and omissions specialist. So for the right accounts and certain unique accounts, sometimes it is better to have a secondary excess and surplus E&O policy.
A separate he's trying to say a separate carrier. If you get a rider on it, you may get some coverage, and is it half empty, half full? Some is better than none sometimes, but as long as you understand it. What he's saying is you may be better off to go buy a completely separate. Probably depends on how much. If you're only consulting and advising, and you said construction management, we're going to have to dive in. If only construction management and not a hammer and nails kind of guy, you're going to probably need the separate E&O policy, because you're tell them about the roof or what.
Yeah, so I have been through a few of these claims, have seen how they've been handled, personally been through them, and can give you some background on it. My favorite example, and I use this all the time, is the roofer. The guy who goes out and he does his profession is roofing. He goes out, puts a new roof on a home, and he puts the shingles on upside down. And a week later, a rainstorm comes through and soaks the home, ruins the drywall and all the interior. So what's covered under his commercial liability policy is the resulting bodily injury or property damage.
So all the wet walls.
All that's taken care of. All the damage that was done from his negligence is covered. Okay, great. Thanks for taking care of the claim. What about the shingles and the roof job that was done wrong? The homeowner says, okay, I don't want you back out here to do it. You put the shingles on here wrong in the first place. I'm going to hire someone else to do the job, and I'm going to sue you for the errors and omissions that you did. Your workmanship was incorrect. And I've seen those cases, $30,000, $40,000, $50,000. So it is important to have workmanship coverage if you're a contractor. Absolutely. So
okay.
The E&O there is going to pay for the cost to tear off and put new shingles back on, the workmanship.
Good. There's more questions. First, as a side issue, someone said, "Oh, I came here late. How am I going to hear the beginning of this?" I will repeat. This is being recorded, and it is going to be on the YouTube channel for Indianapolis Score. So that's where you'll find that, and we'll send you that link if you don't remember what I just said. Okay. How about this one? I have a vending machine business. What kind of insurance should I get? This is, of course, their property is sitting in other people's property, dispensing colas and candy bars and that kind of stuff.
Yeah, we could, I guess let me back up a little bit. It's business, personal property, off premise. You can buy coverage for that. Specialized coverage for that. We insure a porta potty business that has porta potties all over the state here, and very similar to the maybe as vending machines all over. It's a business personal property off premises, and you can buy liability coverage to cover in the event that something happens while using that item.
So on liability, I think the liability is the bigger exposure. You have X dollar exposure on your property on that. Maybe that vending machine is $5,000, or you may say I'm really wrong and they're 30,000, but let's assume you have a $5,000 exposure spread out at all different places. Well, you're kind of mitigating your own loss there. To me, the big exposure is the liability. Who hasn't had a candy bar or Coke machine only go halfway down and you stick your hand in there and try to get it out, and while you're being an idiot, you cut your finger off? Or you have drunk idiots, I don't know, pushing it over. They push it over and they falls on a kid. All of that, you should say, I'm not liable. Well, you may have to go all the way to the courthouse to say you're not liable. So liability to me is your biggest exposure there. What if the food is bad? Or there's something in that vending that you put in the bag of potato chips and it has a razor in it? You're going to get sued on all those things. So liability on that particular is to me is the bigger unknown exposure. Your property, you already know what you have in that vending machine that maybe you can self-insure, or the property won't cost very much because it's all spread around.
Yeah.
So.
Another question, similar, I think, but different business. Bounce house rentals. Okay, this, you go inside the thing, the kids jump up and down, scream and yell.
Right.
It's your bounce house. You put it in their backyard because they're having their birthday party.
Right.
What kind of insurance would you be looking at?
Yeah.
Prayer would be one.
Yeah, those are one of the unique ones that you do not want to buy on the internet. Do not buy coverage for that business on the internet. So yeah, there's specialized carriers who only write liability for that exposures, fun, games.
We have somebody, we have a company that will do it. Absolutely. Now, what I'm going to say on that is you're going to have them come out or help you or assist or coach you on, let's put that around let's not put that on their parking lot. Let's put that down in the grass. Let's not put it up on a windy day that's going to be 30 miles an hour. They're going to be out there consulting you. Back to what do you get when you get it? Well, they're going to be out there advising you, helping you, hopefully coaching you, again, self-serving. You don't want the kids hurt, hopefully. And so they're going to be advising you and telling you and giving advice from all their hundreds or thousands of bounce houses they insure. But liability is your big one there for certain. Now, I'm going to say a disclaimer on that. I don't know if it's insurable right now with COVID, and that. I'm sure it'll start loosening up again and all as we get moving further in this year, but I'm not sure it's an insurable thing right now. Haven't been asked.
Yeah.
With COVID and that close tight.
Okay. We caught up on the questions.
Okay. All right.
Temporarily.
Now on to, let's go to the next slide. Workman's comp. Dustin did, and these are going to be maybe more individual conversations. I'm going to go a little higher level because all of you can read out there. These are statutory things I'm telling you for state of Indiana. One of the things to know, workman's comp is individual by state. So the rules we're talking about here are for Indiana. If you were happen to do something in Ohio, Ohio is insured by the state of Ohio for work comp. They're one of only 5 states in the country that have monopolistic, meaning state, work comp insurance. So work comp is state by state. This is for state of Indiana. Here we are in central Indiana, but just make a mental note of that. These rules on who's insured and who's not for workman's comp have evolved over the last few years. So we're talking about owners or owners here or employees. First, all employees supposed to have work comp. Dustin alluded to that before, mentioned it. That's the easy part to know and remember. It gets a little bit more confusing or gray or whatever when you have different types of entities, corporation, sole proprietorship, LLC, and you can see the different rules that apply. You may decide you don't want coverage, fine. You don't have to have it as a corporation. Pretty much that's a C corporation. You can choose to have it. Of course, that means you choose to pay for it too. So it's always about, you can't have it both ways. You can't not pay for it not pay for coverage and have it and want it after the fact. Okay, so you have to make these decisions early for the year and then live with them. And your corporate entity kind of determines these are for owners. Any owners, that's what I'm talking about here, automatically excluded unless you sign with your agent or your company and say, I want to be covered. So, okay, so, all right, you can find some things on the internet, state of Indiana. We'll talk more about that in a minute. All right, work comp, more about employees. All of you here are probably, if you want to grow your business and all that, ultimately that involves employees. And so everybody wants to start people out at 1099s. They don't want the FICA rules. They don't want the employee. I'll just call them an independent contractor and not have to deal with taxes and all that. Well, it's not really up to you. It's really what their activities are and how you're training them and what your business is. And it can be very gray. So again, it's not up to you. And this isn't that every one of these has to be yes, or everyone has to be no. It's kind of the preponderance of the evidence. If there's more that say yes than no, they're probably an employee and you need to buy work comp and not take the chances. An example we get a lot is, a doctor's office or somebody that just has one secretary that, I'm out doing the work, she's in the office, in the home, whatever doing, and she's not going to get hurt. Well, that is until you send her out to do an errand or go to deposit at the bank or go get some office supplies and she gets T-boned in the accident at the intersection. That quick. You think that secretary, if you will, professional assistant, whatever, is not going to get hurt? Boom, that fast. State of Indiana looks very poorly upon that. They will come down hard on you, your business, and personally. So you just be aware that it can happen at any time, even when you think, that person's not going to get hurt. I mean, it can just be falling down the stairs, something that simple. So enough about that. You can read and discuss. You have to ultimately make the call as the owner on that, how comfortable you are on that. The next page, next slide is for if you want to waive your work comp. So let's go back to the slide with the corporations. Dustin, go back just for a second. Go back to the work comp slide for corporation sole proprietor. So yeah, that corporation. So keeping in the waiver. So you're automatically covered unless waived. Well, this slide now that I'm talking about gives you the ability to waive coverage for yourself. You may be working for somebody that says, you vendor, you subcontractor, you need to have workman's comp and I'm not going to allow you out of it. Well, you can go to the state of Indiana for $25 and sign into state and say, okay, here's my waiver for the customer that's requiring you to have work comp. A lot of times this is used for, you could have one owner that wants it, one owner that doesn't. So you could go in and have this done. But for the state of Indiana allows you as an owner or vendor, as a single person owner, to waive work comp. If you have an employee, it doesn't work. You as an owner and the only employee, if you will, you as the owner can waive it. So that's the waiver of state of Indiana. All right, now let's go. All right, the auto question. So we okay? Yeah, we're one.
Wait a second.
Okay.
Wait.
Okay.
Brian, before you do that, there were a few questions that came in similar to past questions, but I think this is high value to our listeners. Say a few things about the type of insurance a commercial cleaner would want to get.
Commercial cleaner,
a janitorial service.
Cleaner or going out to the, you mean which, cleaner being what kind of cleaner? Going out to houses? Going into houses, going into office buildings at night, cleaning that stuff. All right. I'm going to tell you the first one that going to office buildings at night and all that is going to be here's the insurance guy. I'm going to tell you a worthless one that you'll probably be required to have for this. Digress for a bond. A bond is a cleaner in that case is going to be, you'll probably see, some of you have seen licensed, insured, and bonded. So that cleaner is probably going to be bonded and required to have a bond. A bond is, and we sell them, but I always try to tell people they're kind of worthless, but you have to buy them and they're pretty inexpensive. A bond is out there because insurance doesn't cover intentional acts. Bonds do. So when you, an intentional act in that cleaning example is if that cleaner's out there and they steal something from the desk while they're cleaning, they steal a computer. Well, your insurance policy doesn't cover your employee stealing. A bond would. But here's where the bond is still worthless. And I'm the guy selling it. A bond only pays in 2 times. If the person admits to stealing or they get convicted in a court of law. Keep that in mind. They admit it or they get convicted in a court of law. Both of those are very rare. So, but you're probably going to need it for that person that's asking. The balance of the insurance is going to be liability insurance for maybe more example, if you're buffing the floor. And I've had these claims lots over the years. I go into grocery stores in the middle of the night and buff the floor and clean it. And then it's too buffed and someone slips and falls and they sue you for a wax floor. Or you leave water on the floor while you're in the process. Someone gets hurt while you're in that business cleaning it and someone slips and falls on the water. So that you're going to need that kind of insurance, liability insurance. And by the way, that's going to be totally payroll rate related, totally payroll related on that. And then you're probably going to need equipment if you got any kind of investment on the equipment, off premises equipment for cleaning. Now, maybe you only have basic cleaners and those kind of household chemical cleaners, you probably don't need insurance for that. But if you have an investment, you're taking machines out there cleaning, then you're going to need coverage off premises that Dustin talked about.
Okay, one more question. I'll let you get to your vehicle insurance, and we're going to be fine on time, but we'll probably go to 1:30, which is what we promised. How about the person who's running a catering business? What kind of insurance comes to mind for them?
As a big caterer, we won't say name. I'll let him answer that.
Yep. We do insure multiple caterers. They need the standard, your 4 pillars, your general liability, your commercial auto, workers' compensation, and umbrella policy. A couple of them we have carry a $5 million umbrella, but they have coverage, and you can buy coverage for your food that's being delivered or food that's in transport, or I guess food that's in the transport truck. That's something that's certainly easily insurable.
Okay.
Compensation too, of course. Hey, one more tidbit just on that cleaner. If that person's still listening, one of the coverages that's always important for a company that's doing off-premises cleaning or cleaning on someone else's site is voluntary property damage. That's something that's not included in the package, and a lot of times with companies, it's an optional coverage, so they need to buy that. So if that person's listening, write down the word voluntary property damage and make sure you ask your independent agent when you have that discussion. It's an important part of it.
Thank you for that, Dustin.
Yep. Bill, did you have any other questions at the time?
We're up to date.
All right, thank you.
All right, we're moving to the auto. All right, if I'm going to summarize the question on the auto, well, I'll read this and then I'll try to see, maybe in part answer that and then try to specifically answer the question posed before. PAP and BAP, personal auto policy, business auto policy. In general, here's what I find a lot that happens for people starting up businesses. You personally own the business and you sometimes intermingle things. You might go to Costco and have your business card, your credit card, buy all your stuff. Well, that's fine at Costco and for food. You may have your personal policy. It depends on who's paying for it, right? You may have your personal policy. You want to cover the business vehicle that you have. Oh, because guess what? You're going to say that, and you're right if you think that the personal insurance is cheaper than business auto insurance. Personal insurance is auto insurance is always cheaper than business and auto insurance. Why is that? The limits aren't as high. They're not expecting multiple drivers. It kind of goes back to the home situation. Business auto doesn't care if you use your vehicle for personal. Personal cares a lot to the point where they exclude coverage if you use it for business. There's some gray areas, realtors, insurance agents, even sometimes we make arguments, but keep in mind, and I'll give you a little more specific example. Don't try to intermingle those two. You're asking for trouble. The best example I can give you is you go on vacation and you decide, let's say you're going to have, you go on vacation and you're going to put the rental car on vacation on, and this is a family vacation, you're going to put it on your business policy and put it in your business name. If you don't have the right kind of business insurance, you've rented now, you've rented a vehicle, you put it in your business name and you have no auto insurance in the business policy, or you don't have the right, you are absolutely have no coverage. Because what have you done? You're flipping back and forth, playing the game, money game, if you will, of trying to save money or charge to the business. Do not mix personal and business in any of these situations. You're asking for trouble. I mean, it's no trouble for the insurance company. Say you turn the claim in, they go to Enterprise and say, well, let's see who the named insured is. Is it Mr. and Mrs. Smith, or is it XYZ Corporation? Well, actually, you put it in XYZ Corporation. Well, all of a sudden you don't have auto insurance. Now you have no coverage. Now they're going to come after the business and you personally. So just be careful of that. Don't outsmart yourself and be penny wise, pound foolish on that. That's really kind of what this whole thing here is about. Don't intermingle and get too cute. You can do a lease. You can buy a vehicle personally and insure it and put it on a lease in a business. And I've given you an example. You can do it right, but you have to do it thinking about it. If you're not thinking about it, okay, you're going to get burnt. That's, I guess, and you can talk to us on an individual basis. Now, just a brief mention, and I'm geeking out here for a minute. My wife rolls her eyes. For discussion purposes on another day, I'm at the bottom of this slide. If you ever test drive a vehicle over the weekend and they give you this is personally, they give you the vehicle to drive over the weekend and take it, and of course they hope you buy it. This is one of the worst exclusions we have in the insurance business. Your personal policy isn't going to cover you in that example. And their auto, the dealership's auto, they're going to tell you, we're not going to go after you. You wrecked the car. You're not even going to have this conversation. But after you bring it back wrecked or stolen, oh, that's okay. We forgive you. Nothing's going to happen. Well, that's the dealership talking. Guess what the insurance company says? The insurance company says, we don't think so. We're taking your rights, because that's called subrogation. We are going to go after you, the renter. And there's nothing you can do about it because your personal policy isn't going to cover it, and the dealership can't stop them. So it gets very ugly. There have been some very ugly claims on that. So what you ask for a waiver of subrogation, or put that vehicle on your policy, your personal policy, for a day or two while test driving it. Again, we're deep in the weeds on that, but I don't want you to have a gotcha on that. You can ask us about that, but be very careful about test driving a vehicle, because they will come after you, the dealership. Now, okay, all right. We could go on further about that. We're running out of time. All right, the last slide, I think, I have two. Dustin had mentioned these. Just be aware, employment practices, liability, and cyber. EPLI is when you have employees. Discrimination is a big one. Sexual harassment. You don't even have to hire somebody. They could sue you for not hiring them. Maybe whatever reason you didn't hire them, but they could say you didn't hire me because I'm black or I'm fat or any of those bad, unmentionable things. Age. Yeah, age. I mean, maybe they just weren't qualified, but you get sued even if you don't hire. So you don't even have to have an employee in this case for that. Right now, I'm going to tell you that's very difficult. It's expensive to buy because of COVID. A lot of people have been laid off with COVID, a lot of COVID. If you don't have it now, it's probably not something you can buy now, but it's something you need to put on a checklist and be aware of when you can, or you have enough employees. But COVID has turned that EPLI business upside down. Dustin's reminding me to say it's a prepaid defense policy. That's really what you're buying. It's a good thing to buy, prepaid defense. Cyber insurance. Well, you have to live in a cave not to kind of know. Department of Defense, every Visa, every person in the world, these big companies are all getting tricked one way or another. We, in our medium-sized agency, we've had a number of cyber claims for our clients, and this can be malware, or really a lot of it anymore is ransomware. They are absolutely locking your computer up and say, until you pay me $1,000, $10,000. I have a golfing friend, they paid $3 million. The insurance company paid $3 million. This is a big company here in Indianapolis, won't go name. They paid it, didn't make the news. $3 million for a locked. They should have known better. They should have had better protection, but $3 million was the ransomware, because the people are smart. The crooks are smart, I hate to say. They know how big you are. They know what you can afford, and probably that you have crime insurance cyber for it. So of course, maybe $3,000 to some of us is like $3 million to that company. So be aware that is out there. That is a very big thing to buy anymore. 50% of our clients are buying it now because they're scared not to. The last thing is just, it was an example about the costs associated with cyber, but we are running out of time. So Dustin, coming back in, is there any other questions? I won't go into that slide. So any other things here?
There's another industry question.
Okay.
Mobile notary.
A bond, right? They need a notary bond, which I just had a new employee get one. You have to, notary now is there's a test. My employee that just did it, she failed the test a number of times before she passed, which was, so there's and it's, I think the state of Indiana, if you're a notary, do they supply? I don't know. We didn't buy her insurance for that.
No, some come with liability. We do have a West Bend who will provide liability.
Okay, so that might be no more than a couple $100. It's a very low minimum premium policy with minimal. We've seen one notary claim, I have, but that's very minimal, inexpensive, because the exposure is very minimal.
That's all the questions that I have here. It looks like you're on your last page.
Yeah, and Bill, back to the, I just want to expand a little bit on the caterer question. I know I just briefed over that one pretty quick, but in my time here to the side, I looked back at my insurance checklist where I had those 10 items, and 9 out of 10 of those items are all things that my caterers are going to, my larger ones do purchase. So with the exception of professional, all of them have those 10 items.
From the insurance checklist.
From the insurance checklist, which is a few slides back, yeah.
So everybody who is registered will get a copy of your slides, and I know some of your slides are pretty dense, and having them printable so that they can see them at the other end is going to be very helpful. I think this was great. A lot of good material. From my perspective and as a mentor, opening people's eyes to the potential risks and potential to have risk mitigation through insurance, I think is important, especially for newer entrepreneurs who have kind of slid from a hobby into a business, or from, moonlighting into something that has more substance. They're not crossing a line that shows them, here's the time to start thinking about insurance, but they almost get there by accident. I had actually a friend who, he had a pickup truck, and then he got a lawnmower, and then he mowed a few lawns. Well, then he got a trailer, and then he got a few more pieces of equipment. And then he mowed a few more lawns. He still had a day job. Well, one day he was out with his pickup truck and his trailer and his equipment, and a guy jumped in the truck and drove it off. He got his truck, got his trailer, got his equipment. And it turned out the only thing that the insurance company would pay for was the truck, because he had it on his personal policy. They didn't care about the trailer or any of the landscaping equipment that was associated with this whole situation, because that wasn't personal property. That was business property.
And
So
I'm going to give you a twist to that. what if he would have wrecked it and rear-ended somebody and he was using it clearly as a commercial liability and it was liability, they wouldn't have paid then because that was a liability claim. And then his company wouldn't even have paid the physical damage because he was completely using it for a business item and all of it was gone.
Good. So there's lots to think about. I think you've opened up everybody's eyes. I'll give you a chance to say goodbye and then we're done. Perfect.
We welcome all your calls, any calls, or, you know, if you want to hear, you know, specifics to your situation, Dustin or I, one of us, happy to help you.
Thank you very much for your time.
Nope. Have a good.
Okay. So everybody will get a link to the recording. We'll get a copy of the slides. Give us a couple days because we have to edit the recording because at the beginning it starts before we really go live and you don't want to sit there and see the three of us chatting with each other about nothing related to insurance. So
You gotta leave that priceless joke in there though.
I like that joke. It made me think. All right. You saw one of the comments, someone wrote in that joke was hilarious. So
no, we didn't. We don't see that. No.
Okay. Well, now you know. All right.
They get free insurance for the day.
Okay. Thanks, guys. Appreciate it.
Thanks, Bill.
Bye.